Welcome back, my awesome people. I finally did it. I finally did it. In today's episode, I'll be talking about why I sold all my Coca-Cola shares and what I did with my profits. So stay tuned to the end to see how I made more money by selling my Coca-Cola shares and bought this other stock that exploded just in time of when I sold Coca-Cola. And just a little sneak peek, I sold my Coca-Cola shares for $73.25. And that was a 40% gain of when I bought it. Now, many of you already know that Coca-Cola has been around for over 100 years, and it is one of the strongest and most dependable companies in the stock market. It is also considered a dividend king, which means they have been increasing their dividends for more than 50 years and are a reliable source of passive income. Coca-Cola delivered strong 2024 results, including increases of 12% in organic sales and 7% in comparable earnings per share. Notably, global unit case volume expanded by 1% for the year, despite consumer pullback and geopolitical uncertainties. In its most recent quarter earnings report, Coca-Cola did well. It beat expectations in certain areas and kind of fell in others, but it still had a resilient performance, which is perfect for the current tariff disaster that we are going through, as it is committed to product innovations and brand investments. Now, enough with the stats. Let's talk about the White House. Two major factors that are affecting Coca-Cola that are coming from the White House. The first is tariffs, of course, and the second is Robert F. Kennedy's legislation on unhealthy products and chemicals in food. So first, tariffs. Coca-Cola says that it is unfazed by the tariffs, as it can adjust and work around it. And that is evident because the price keeps going up. From when tariffs were announced to now, share prices have been up more than 10%. Coca-Cola has historically increased organic growth with strategic acquisitions such as energy drinks, sports drinks, caffeine drinks, and water. And I expect Coca-Cola to continue dominating and doing so. Since tariffs are making everything expensive, a price increase on Coca-Cola products will not deter consumers from buying them. During the COVID lockdowns, when Coca-Cola's operations were pretty much shut down temporarily and prices drastically increased, consumers still consumed. For many people, Coca-Cola is like water. They cannot get enough of it. And for others, Coca-Cola is actually cheaper than bottled water. So Coca-Cola has become a staple in many homes. So price is not too much of a worry. Coca-Cola is strong. It has built an economic defense around its global beverage operations based on strong assets and a significant cost advantage that will deliver investment returns beyond the next 20 years. Now, the healthy stuff. Non-alcoholic beverage demand tends to be the strongest during rough economic cycles. As consumers become increasingly health conscious, Coke faces the challenge of reducing the health impact of its beverages without compromising on the distinct taste that sits at the core of the brand loyalty. But that distinct taste comes at a cost: your health. With the amount of sugar and artificial chemicals in Coca-Cola, it has become a problem in the health sector. Robert F. Kennedy Jr., who was the Secretary of the Department of Health in the White House, has promised to increase the health of Americans by cutting out the sugar, harmful chemicals, and dyes that are found in food and beverages. And this has revolutionized the food and beverage sector, as many companies are starting to use natural over artificial in their products. Not only that, but he has stated that he will not allow EBT cards, which are government assistance cards to buy foods, to be used to buy Coca-Cola. And this is what many investors are watching, of what kind of policies or impact that these policies will have on Coca-Cola as a whole. Coca-Cola, thankfully, has many products that are much healthier than Coca-Cola. So its bottom line may not be greatly affected. With these two factors weighing on almost every company, Coca-Cola is somehow working around it and still making gains for its shareholders. So, Jacob Rant, why did you sell Coca-Cola if it's doing so well and will continue to do so well in the future? Well, my awesome people, Coca-Cola is a strong company with a great financial track record and dividend payout. However, when looking at my risk tolerance, there are plenty of other companies that are paying out a higher dividend with a much cheaper share price and soon to become a heavy player in the market. I bought Coca-Cola right before the COVID lockdowns at a price of about $50 a share, and with a 40% gain, I sold all my shares so I can increase my risk. At the time of selling my Coca-Cola, Ethereum was at about $1,500 a coin, which was a great bottom at the time. So I bought. Now, Ethereum is sitting at about $2,600. I do not stake my Ethereum. Instead, I buy ETHY. Ethy, which is an Ethereum ETF that pays a double-digit dividend yield. So instead of holding my money with Coca-Cola that pays less than 3% in dividends, I took a more riskier path. I bought crypto. I bought Ethy as a way to collect great monthly dividends while the ETF share price continues to appreciate and increase. There was a small window of opportunity of when Coca-Cola hit its all-time high and when Ethereum hit one of its all-time lows. So it was a perfect time to pretty much swap, and I am currently up more than 20% on my ETHY. And while up, I am still collecting a massive monthly dividend. Many of you will probably say that Ethereum is not guaranteed and can go to zero at any moment, and that Coca-Cola is a much better company. Yes, you are right for thinking that. But this is also where the risk comes in. Because Ethereum is much newer when compared to Coca-Cola and doesn't have an extensive track record like Coca-Cola, it has been down extremely, tremendously. And so when compared to its all-time high of $4,600, and that is where risk tolerance comes in. I swapped a safe, reliable stock for a riskier, higher gains stock. So overall, it was a great trade and one that I will be holding for a long, long time. So my awesome people, if you are thinking of getting out of Coca-Cola, you can, especially with the current crackdown of unhealthy food and beverages. It could be a good time. And if you do continue to hold it, you will be rewarded in the long run. Even though I have never bought Pepsi shares, I am going to say that Pepsi is also in the same boat as Coca-Cola. But the difference is Pepsi also sells various types of snacks that are not always the healthiest. And because of this, the tariffs and health policies could have a bigger impact on Pepsi than Coca-Cola. We are going through some revolutionary times right now, whether it's laws being passed, tariffs, the debt bubble, global wars and issues, and even just natural disasters. Be very careful with your investments because right now could be the best time to buy low. But it can also be the best time for weak companies to go bankrupt and strong companies to stay resilient. Now, I want to hear from you. Are you Team Coca-Cola or Team Pepsi? Drop a comment below and let's discuss. And don't forget to like and subscribe if this video gave you any value and insightful content. And remember, my awesome people, just like all the information I mentioned in my videos, please, please, please assess your risk appetite, always diversify, and do your own due diligence because I am just a clown on YouTube. Stay ranting.